What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is May 4th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to give an updated perspective as to where I think Bitcoin's price is going and the halving event, and talk about some different scenarios that might happen and how I'm actually going about placing my positions. So we'll talk about all of this and more as we go into the video right after our quick sponsor. Our sponsor for today's episode is Bitpanda Pro. Bitpanda Pro is the secure European exchange for crypto to fiat markets. Bitpanda has been offering secure, straightforward, and easy access to the cryptocurrency market in Europe for over 5 years and wants to offer the same service to more experienced traders, users using trading bots, and other advanced clients like cryptocurrency businesses and institutional investors. With the steady addition of more and more crypto to fiat trading pairs, Bitpanda Pro has made itself a convenient, secure, and trustworthy exchange to onboard or cash out easily. Check out the link down below in the description to learn more. Alrighty, everyone, so let's go ahead and start by taking a look across the board at the market. As we can see here over the last 24 hours, the vast majority of cryptocurrencies are in the red here as Bitcoin has started to dip down about 4 to 5% here over the last 24 hours. Again, altcoins in this case, usually with most sell-offs facing a little bit more sell-side pressure. So Bitcoin dominance as well, we'll talk a little bit about. I forgot to mention that at the beginning of the video. But the major thing I want to talk about here first is diving into Bitcoin's price going into the halving event. We are really just a couple of days away from it. It's going to be here in the mid part of May. And again, it could vary a little bit, but at the end of the day, this is what we have to be interested in right now, asking whether or not Bitcoin's price is going to make any significant moves up into the halving event. And along with that, whether or not it's going to do something afterwards. I think this is a really interesting question to ask. So the simple data here that we can look at in the sense of, turning back to history is taking a look back at historical price. So I'm going to go ahead and cut out the noise. We got a really nice chart here from CoinDesk that basically showcases the first halving event in 2012, the second halving event, and the lead up now to the third halving event in 2020. So this is the current one we're currently at here, up to a little bit, I think, past May. So let's go ahead and just dive in a little bit into each of these. So we can see here back in 2012, back in the real early days of Bitcoin, as we were making a transition from the fall of 2011 in this case, or excuse me, this is 2012 here in this case. You can see our price had dipped down from about $13 down here to about 10, and you can see we rallied all the way up to about $14 going through the halving event. So you can see again, price rallied through and continued higher throughout the first halving event. Second halving event here was a little bit different. We got a precursor rally here. We went from about $550 all the way up to around $780, and then came down quite sharply even before the halving event down to $600, and kind of continued through in between the high and the low here between this during period of time. So again, two different kind of scenarios here for the halving event. And now on the third one, we see something similar to what we saw back in the second one. We see this kind of precursor rally, this rally happening before the actual line, which is where the halving event actually happens. So a lot of people here would probably assume right off the bat that we're going to do exactly what we did here in the second halving event. Not to mention, not only are they very similar, but also the second halving event was in a much more formulated market, so we'd probably get something much more similar there rather than back here where Bitcoin's price was really determined by a few dollars of volume on a couple exchanges back in 2012, right? So is that where I stand in that case? If you guys are really wanting my opinion, I'd like to hear what you guys think down below in the comments. But I know some of you are probably wondering, is that where my mindset is, that we're going to see something similar to that? And quite frankly, I don't want to be too confident in saying that. And I'll explain why as we go throughout looking at the chart. Now, of course, does the price action line up quite nicely? Going from 7K to 9K, down here 550 to 780. Yeah, it lines up pretty good. Right? But the major thing that I'm really interested in here is the kind of wedge that we're starting to formulate here after we've made this leap up in price. We can see here on the daily, right, we've had a really nice rally here, and this is the first period of time since back here in kind of early to mid-April that we're getting some form of kind of consolidation, or price is pushing sideways. And what I like here is if you take a look at the hourly, you can see that we are building a it appears to be that we're formulating a wedge of some sort. So the major thing I'm looking for here is to see how price coils in here. Now notice as well that the wedge leads up just about a little bit under a week away from the halving event in this case. So the major thing that I'm going to be watching for is to see whether or not this comes up to the line of resistance, eventually breaks out and continues the trend, whether it's over here, or if we break downward below this wedge. And that's something that we definitely don't want to see in price if you guys are hoping for Bitcoin to move into the halving event. You're going to want to see consecutive higher lows and no violation of those lows, and continue to move higher where we start to set higher highs. Again, turning to price action, not depending too much on indicators. We're not using any indicators here, right? Now again, wanting to see volume, if anything, but again, price is going to tell us what the market is willing to pay for Bitcoin and whether or not the bulls are winning out against the bears. Plain and simple. So again, watch this wedge here, see what happens here. Now the general thing you can do, guys, and again, in this market, I hate to be so cynical, but the thing is, in regards to setting stops and stuff, yeah, it could probably be good if you guys wanted to try to trade it, if you wanted to take some profits on or a partial share. It's really up to you in this case. You're gonna have to determine that, but you could set like a stop or something slightly below the wedge and stuff. But bear in mind, people might stop trap you in this case. Basically, the price could go down below and it can come right back up. It's Bitcoin, so you might not want to set too tight of a stop. But the major thing I'm watching for is to see this whole consecutive higher levels, because if it does violate this, it's likely that it's going to roll over here, and we're going to get a very similar repeat of what we saw back here about a week to 2 weeks out and stuff before the halving event, right? So we might just be getting a little bit more delayed here. But I don't know. Who knows? We might get a continued rally. That's the whole point to it, guys, as to why I'm not bearish on it, right? I'm still holding my cryptocurrency positions through this, and I think, again, there's a good chance we could climb through, retest these levels, and possibly go up to a higher range at 9,000, 9,600, 9,700, 9,800. I think that'd be very plausible. So again, as this formulates, keep an eye on it. All right, so I've rambled on enough about that. I want to go ahead and talk a little bit about altcoin dominance as well. So we can see here, altcoin dominance. Oh, charts. There's some. Oh, it's because they're on the hourly chart. Yeah, this is a weird thing, guys. We'll get sometimes with like data here, or like on the hourly chart, certain time frames, it'll get really wonky. But here's our actual chart here. So this is one thing I started to notice the other day, is we started to see a pullback in altcoins. And some of you have been also asking me, Nick, are you still holding your altcoins? Yes, I am. I'm still bullish on altcoins. But the general thing here that I'm watching for is for price to start rebounding here in the next 24 hours, or at least not so much price, but market dominance for altcoins. And the reason why is because we're building a short-term wedge here. We started back here in January, we topped it here in February, bottomed here in March, topped out in April, and now here in May, it looks like we're starting to coil inward, and we're going to have it rally back upwards. And the general thing I'm looking for, I mean, a lot of this is because of the halving event, a lot of capital is allocating towards Bitcoin. It's understandable, we see it in the price, but the major thing to focus on here is to see where we'd start setting a rebound here and we break out and take on to the much longer term trend, as we've already discussed multiple times here on the channel. Eventually breaking out of this short-term wedge into the longer term wedge, breaking out of that, making it support and continuing higher. That's the general thesis here, right? And we're not, shooting for an absolute vertical breakout like in 2017. We're calling for a nice steady cycle here where we start to gain market dominance, because we don't have that same kind of room of growth. And along with that as well, the cycle is going to be based much more around, not per se, I'm not going to say that there's not speculation or that fundamentals are the only thing that's going to matter. It's not true, right? I think it's definitely going to be much more fundamental than the last rally, but the major thing is that not all plays are just going to rally like last time. Plain and simple. So anyways, just wanted to talk about that, an updated perspective on that. I'm not worried about it in the sense, guys, we're getting much tighter here on the wedge, so it's understandable here that we come down to touch the bottom, and then eventually we're going to start rallying out of it, hopefully. If we did break down in this case and we start really going lower, in that case it might be a cause for concern, and we might wait. Again, I might just look to average in this case at a lower position around like 30% dominance. It's just me personally. I'm not saying you guys should do that, but I might consider doing that. Again, the altcoin positions that I'm holding here for a breakout on this longer term wedge, I'm not really going to care about what happens in a short term wedge like this. Just wanted to give you guys a preface as to what dominance is doing here. Again, a lot of people don't look at this, and they also don't look at what I like to talk about, which is ratios of a certain asset to another asset. Like gold to the S&P 500 to learn about commodity cycles, or when it's bullish time to get optimistic on on precious metals like gold and silver. Anyways, now we've talked a little bit about that. Again, I don't want to dive into individual altcoins today. And that's pretty much it for the sense of our main topic in cryptocurrency markets. I do want to talk a little bit about the interesting changes we're seeing in traditional markets. And this isn't really about traditional stocks or anything. It's traditional savings that people have here. So this is the highest level people are saving cash here in the United States. We can see the personal savings rate is currently resting at 12 point, give or taking up at 12.8, 12.9%. Highest level since 1981. It's pretty incredible. And this is a big misconception a lot of people have, about the increase in savings in the economy. Now, to be fair, this is the broader market of savings, right? So it doesn't mean that the average American is having their highest kind of savings and the greatest incomes ever. That's not true. But this is really due to two things. One, you have a lot of people who are going to cash right now, who are not investing in assets. They're, again, going back to just maintaining savings in this case and cutting out and mitigating as much risk as possible. But you've also got a lot of things like the Paycheck Protection Program, PPP. You've got a lot of different things. You got a lot of new cash being injected from the Fed, the Treasury, and the federal government that's leading to this spike up in the savings rate. So again, very interesting dynamic here where there's a lot of new cash in the system. What's it going to be used for? Is it going to move? And if you guys want my opinion on it, I really think it is going to be moving. I don't think this rate will remain high that long because other people are going to need to spend it. But along with that, I think people are going to start allocating their capital elsewhere because right now we have a really, really toxic environment for you to own capital. Money's being printed like crazy. That doesn't help your purchasing power if your wealth is in dollars. Second off, negative interest rates. The current national savings rate right now is 0.07%, 7/100ths of a percentage point. And soon, if the Fed funds rate goes into negative territory, we're sitting at 0.25%, nearly 0%, but to be completely precise, we're not just there yet. But what happens when the Fed drops another 25 basis points and goes down to zero? Or another 50 basis points and goes down to a negative quarter percentage? We start going to negative territory. What happens at a negative percentage point? It's going to get very interesting if we get to that point in the United States. We already saw negative Treasury yields. Don't doubt for a second that it's going to hit the Fed funds rate and eventually hit your savings account. What's going to happen in your mindset when your savings, which are already losing value to the mass amount of printing that the Fed is doing, you can see it reflected in prices, whether it be the prices of assets or the prices of goods or services. What happens and what would you be thinking in your mind when you start to see that you're being penalized for saving? My first instinct, and I think one that's well rooted, would be to get my money out of that system into something that isn't penalizing me, something that can't be printed into oblivion. And probably because of those two factors, it's probably soaring in price, right? It's not, this is the one thing that I really have a difference from with a lot of people in the space. And I wouldn't say a lot of people, but just some types in the space. Some people just say that because, the halving event, Bitcoin's going to 100,000, Bitcoin's going to $1 million tomorrow. I don't believe it's going to those levels overnight. And the other thing that separates me from a lot of people is that I understand that there needs to be a fundamental drive as to why Bitcoin can actually go to these levels. It's not just programmatically function through the halving event. Yes, that's true. It's an important thing. But you need the catalyst that's actually going to drive liquidity to shift into this market. And there couldn't have been a better time for Bitcoin to thrive in, right? And I'm not saying this is a good time. I'm not excited about this. Negative interest rates and mass inflation is scary. It depreciates the purchasing power of everyday people. It's not something I'm excited about. What I'm excited about, though, is that we do have a way out. This was inevitable, guys. This is going to happen in some way, shape, or form. And it's not just the Fed. It's the ECB. It's the Bank of Japan. It's the People's Bank of China. It's the Bank of England. All these central banks across the world are printing at mass amounts. And now, with the most recent program from the ECB that's been in effect, we are now at 62% of GDP for their balance sheet. 62% of the economy being made up by the balance sheet of the European Central Bank. That's a lot of different stimulus programs, a lot of central planning. Has it really worked out? That's the real question. And quite frankly, I don't think it has. Most central planning always fails to some degree. And main thing to keep in mind here, it seems like printing our way out of our problems and penalizing savers is probably not the best way to build a healthy long-term economy with steady growth. But who knows? Maybe I'm crazy. Anyways, guys, I hope you are having a great start to your week. best way to start it is to rant and rave on about the banking system and how cryptocurrencies, as well as gold and silver and a lot of emerging technologies in this blockchain space, are offering ways out. And I'm very excited to be here with you all, not only during the Halving event, but also during all this innovation that's been going on in the space. So if you like the video, drop a like, consider subscribing if you haven't, as well as hitting the bell icon so you don't miss a video. Always like having more of you join the Data Dash family. But until the next video, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.